So another month and another InvestEngine portfolio update. This is the account where I regularly invest £100 a month and never try to time the market. So for a limited time, if you sign up to InvestEngine using the link in the description down below and top up £100, you will receive a £25 welcome bonus. Also, throughout the month of August, for new and existing members, if you start using the InvestEngine savings plan, you'll be put into a competition where you can win £1,000. So this is my InvestEngine portfolio. As you can see, the total balance is £1,680, and that is an overall return of £105.23. So within my InvestEngine account, there are a few cards that have different portfolios of ETFs at different ratios or different ETFs entirely. I'm going to go through all these different portfolios and show you my return on my InvestEngine account. So the first portfolio that I have is a mix between the Vanguard S&P 500 and the Vanguard FTSE Japan. As you can see from this portfolio, I haven't invested into this particular account for a while now, and all my purchases were a while ago. The great thing about InvestEngine is that it gives you the flexibility of only investing in the ETFs that you want it to. So currently I haven't been wanting to invest in the S&P 500 or the FTSE Japan. And when you create these portfolios, you can choose what ratio you want that money to go into. So when I set it up, it was 80-20. However, you can override that whenever you want. For example, if I wanted to invest in the Vanguard S&P 500, I can just go in and buy and sell whenever I wanted to, overriding the ratios that you put in at the beginning. In any case, this portfolio has yielded me a good 11% return, so that's a £19.45 increase. As you can see from the power of regularly investing no matter where the market is, even if you stop investing for a while, the chances are that you're going to get a return, as the markets do tend to trend upwards as a function of time. We remember 1 year ago when the Vanguard S&P 500 was just dropping and dropping. Now we can just see them as great opportunities to have bought into it. For example, here I bought at 61.89, which was a great price. Again at 61.98 and all sorts of different prices. We can see that if we had consistently kept buying, we could weather all the dip and overall make a healthy gain at the end of the day. Same thing with the Vanguard FTSE Japan. I bought it at very good prices. If I press this button, you can see my net contributions, and if I ever wanted to invest in this portfolio again, I can do, or however I can just decide to make a new portfolio, and this allows me to segment my money in different ways. I like this control personally, as I could always go back to a card and see how that's performed, or make a new card that has a different ratio of the same or different ETFs and just invest in that. For example, here is a mix between the Vanguard S&P 500 and the Vanguard FTSE Germany All Cap. As you can see, when I created it, it was a 95% 5% split, but now it looks more like a 50-50 split. So the last time I invested in this was the 2nd of February 2023, and if I wanted to, I could just go in and just buy the Germany All Cap. As you can see, unwillingly I did buy it at the absolute pit, which was a very good price to buy. So the theory behind pound or dollar cost averaging is that if you invest regularly, you maximize your chances of paying a lower average price over a long period of time. This is theoretically compared to lump sum investing. However, there isn't enough data and there's conflicting research on whether or not lump sum investing, which is investing all your money at one point in time, or if pound cost averaging is better overall. I would say go with whatever you're comfortable with, and I think that a lot of people just tend to end up pound cost averaging anyway, as they get paid their wages monthly anyway. In any case, this portfolio is up by a good 11.35%, yielding me around £11.58 in return. And the next portfolio was a portfolio that I intended to just keep investing into, and again, because I love to change my mind all the time, InvestEngine really works out for me. So this is the GSPX. Instead of investing into the Vanguard S&P 500, it was the iShares S&P 500. This is a fund that is hedged, meaning the currency differences between the Great British Pound and the dollar is less of an impact than if you were investing in the Vanguard S&P 500. Now, as you can see, over the past 6 months, I have been buying regularly into this, and you can also see that I have inadvertently bought at very good prices, again showing that regular investing is probably your best strategy to make gains over the long term. So within this portfolio, I have a return of 7.5%, yielding me £79.62 in return. Again, like I said, I always change my mind, so I have no longer been investing in that, but that's fine because I have made another portfolio. So the one that I have been regularly investing in nowadays is the FTSE 250, but when I made the GSPX, I also made another Germany All Cap portfolio here, and in this portfolio I only bought at one point in time, and this is actually a good lesson to show, is that if you just buy at one point, the chances are that within a short or medium period of time, you're not going to be making much gain. In any case, in this portfolio, as you can see, I'm in the red at -3%, but it's only a loss of 87 pence. So nowadays, I like to invest in the FTSE 250, and of course, InvestEngine makes it very easy to do that. I made a video on how to set up a savings plan, which is probably your best bet to make investing as simple and automated as possible. Like I said, I'm a heavy tweaker, and I did have saving plans set up for me, but I personally just prefer to do things manually as it gives me that sense of control. But for most people, I would highly just recommend setting up a savings plan in the portfolio that you want it to. And what savings plan essentially does is you can do weekly, bi-weekly, fortnightly if you want to call it that, or monthly transactions straight from your bank account. You can set up recurring payments straight from your bank account through TrueLayer, and once it reaches InvestEngine will apply an auto invest in the way that you want it to in the portfolio. So for example, if it was £100, £100 will come from your bank account into your InvestEngine portfolio, and that £100 would be applied in the ratios that you set it up. Like I said before, if you just have one ETF, then it's going to go straight into that ETF. So I've been more recently investing in the FTSE 250, and I've only made 3 purchases, but I try to make them as regular as possible. I try to deposit at least £100 per month. As it stands, because of the high volatility, the FTSE 250 has yielded me a -£1.08, but in the long term, I'm very confident that I'm going to be making gains, providing that I invest as regularly as possible. So don't forget to use the link in the description down below and receive a welcome bonus when you do sign up. Make sure to check out some of my other videos, and I will see you in the next video.